For example 14.2 then, it's a similar sort of situation to what we had in the last question, where we're asked to calculate the capital gains tax for Katie for the tax year 1920. So Katie has sold her trading business as a going concern. So she's sold a business, so she's got rid of everything, and that meets the criteria of this first item in the table. All right, sells the whole of her business, it's a trade, and it's sold as a going concern. Okay. Now, when she sold the business, these are the assets that she sold, and she's created these various gains: a factory newly acquired, some goodwill, a warehouse, and investment property. Now, all of those will be classed as business assets, except for the last one, because it's an investment property. So an investment property is not a business, it's an investment. A business asset is something you're using to run your trade. It does also say that the business was set up in 2004, so our business has been going for more than 12 months. It does talk about the factory was acquired in March 18, but that's not really relevant here. As long as they're business assets, we sell all of it or a major part of it as a going concern, and the business has been going for at least 2 years, that's what we need. So these business assets are going to get entrepreneurs relief, but no entrepreneurs relief for the investment property. Now, in addition to that, Katie has sold some shares in an unquoted trading company, creating a gain of 6,795. So now we're looking at the shares example in the table, which is the third item. So we want to know whether it meets this criteria down here as being a share that's entitled to entrepreneurs relief. Well, it is a trading company. It says unquoted, but that doesn't matter. It can be quoted or unquoted. The key thing is that she owns at least 5% of the ordinary shares, and she bought them 10 years ago, so she's had them for at least 2 years, and she also works for the business. It might be part-time, but it's irrelevant. As long as she's got at least 5% and she works for the business, that's absolutely fine. So she is going to get entrepreneurs relief for the shares. Now, previously, she has used some of this relief. She's used 4.9 million. So remember, we've got 10 million in total. So she's got 5.1 million left. So her gains already, we can see, are going to exceed that, but she is only going to get 5.1. So let's sort this out then into her entrepreneurs relief gains and her other gains. So always keep them in separate columns. And if you have a residential property, then you will need a third column as well. So let's list them then. So she's got the factory, which is 275. We've got the goodwill, which is 330. And then we've got the warehouse that makes a loss. All right, remember, you always net off the gains and losses for the current year. And then in the other gains column, we're going to have the investment property, which is 1 million. And then we're going to finish off with the shares in the entrepreneurs column, which is the 6,795. So if we add all that together, we've got 7.3 million of entrepreneur gains and 1 million in the other gains. So the last thing we need to do is to see if we've got anything else to reduce that, like losses brought forward or annual exemptions. So if we go over to the question, it says Katie is a high rate taxpayer. She's not made any other disposals in the year, but she does have unused capital losses brought forward of 289,000. Okay, and we're going to use those, remember, against the non-entrepreneur assets along with the annual exemption. All right, always remember these are going to get taxed at higher rates. Okay, so they're in the worst position. So any deductions always want to come off the other gains first. Or if you had a residential property, that'd be the priority because they're even higher at 18 and 28%. So that brings us down to a chargeable gain of 7.3 million, because that's not changed. And in the other gains, 699. So let's have a look at capital gains tax next then. So entrepreneurs relief gains. Well, we can't tax all the 7.3 million at 10% because of this relief. We've already used 4.91. So the most that I can claim relief on is 5.1. So 5.1 million will be at 10%. And that gives me 510. And the rest of the 7.3, which is going to be, what's it going to be, 2.2 million, will be at the normal 20%. Why 20%? Well, it's not residential property, is it? And the higher rate is going to be 20 or 28%. And then the other gains, which is this, what have we got? 699,000 will be taxed at 20%. So in total, my capital gains will result in a tax of 1,089,800. And again, I know it doesn't ask for it. Let's put it next to it. Due date for payment, 31st of January, 21. Here we didn't know what their taxable income was, but they do tell us, don't they, that they are a higher rate taxpayer. So they're actually telling us that we've used all of the basic rate band. So anything that doesn't get entrepreneurs relief is going to get taxed at the higher rate, which in this case was 20%. But if it were a residential property, would have used 28%. All right, so there's no need to calculate the band here because it told us that the band had been eliminated at this point.